Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, as you can see, I am back in the studio. Like I say, I'm back in the studio and I'd like to discuss how the market is currently waiting for the main event this week, which is happening on Friday. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So what is happening at the moment? At the moment, the market in general is treading water, so to speak, because really it's bracing itself for the event which starts tomorrow, which is the Jackson Hole Symposium. For those who are new to trading, just to give you an explanation of why this event is key and why the market is sort of holding its breath for this key event and bracing itself is, but basically the Jackson Hole Economic Policy Symposium, okay, is an annual forum, okay, sponsored by the Fed of Kansas for central banks and policy experts around the world to focus on a particular topic. Now, this topic this year is most likely going to be inflation, and we all know how inflation is affecting every single one of us. And this is key, okay? This is key because the market is going to wait for any indications, any speeches, any topics which will come out of this forum to indicate what the Fed's going to do, building up to the main event. The main event, which is on Friday, which is where Jerome Powell, the Fed chair, will do a speech, and the market is waiting with bated breath to see if he's going to be hawkish or if he's going to maybe drop hints of doing slower rate hikes, okay? So this is why it's key, because for now, the Fed continues to be very hawkish in its stance. In fact, Yesterday, another Fed member, Neil Kashkari, okay, he said in a speech, it is very clear that the Fed has to tighten monetary policy when inflation is 8 to 9%. He went on to say, we run the risk of anchoring inflation expectations and leading to very bad outcomes. In other words, he believes, despite whatever is happening in the economy or whatever economic data we have, they have to bring inflation down. Basically underlining the fact that he believes that the Fed has to carry on with being aggressive in raising interest rates. We all know how the market feels about that. The market generally feels if they carry on being really aggressive with interest rate hikes, that we are going to fall into recession. We're going to fall into recession. So that's what he said, and this is what he believes. But of course, the main build-up, and the market is waiting for this, is Jerome Powell's speech on Friday at 2 p.m. UTC. Will he be hawkish? Will he be hawkish? That is the thing. That is the thing that the market is really, really waiting for. On other things, recession fears continue to grow. New home sales. I've been talking about the housing market in the US and how it is key. It is key. New home sales was announced yesterday, lower than anticipated at 511,000 new homes versus 575,000 expected. Don't forget, new home sales is new properties built and sold, okay? And that's a big drop in the number. So that is very worrying. I've always said is keep an eye on the housing market in the US, because I think that is a crisis waiting to happen. I really do. But this sort of underlines that, like I said, what I've been talking about for several weeks. Now, the question I have, of course, is there more bad news on its way? Because we have other data coming out today. We have US durable goods, okay, and that's due at 12:30 p.m. UTC. Don't forget, US durable goods are purchases of long-term assets or long-term products, so to speak, like products which have like a lifespan of at least 3 years. So things like cars, boats, things like this. So this is why it's key, how confident the consumer is in investing in long-term products. Expectation is for it to come in at a lower figure at 0.2% versus the previous number of 0.4%. So the market, again, is expecting a decline in durable goods. As well as that, US pending home sales, more housing data is due today at 2 p.m. UTC. Expectation is to come in a negative 4%, slightly better than the previous number of negative 8.6%, but still a negative reading. So let's see how bad that data is. Moving across the ocean to the Europe now. Euro is still under extreme pressure, still way under parity at the moment as the energy crisis weighs heavy on it. In fact, the euro has actually fallen by 12% against the US dollar so far this year. And don't forget, I've said before, Jane Foley of Rabobank, she believes the euro can go to 0.95. Morgan Stanley believe it can go to 0.97. ING have also said they believe the euro can go to 0.95 as well. So how low could potentially the euro go to for the remainder of this year? Let's have a quick look at the market as it currently stands. Okay, so this is the euro at the moment as we're talking about it. This is on a 30-minute chart. As you can see, we're still way under parity. 0.99483, trading above a key level, which I can see, key area of interest, 0.99287. But yes, still under pressure. We're not going to see it break that pressure until it can potentially break another key area of interest, which is 1.00027. As it stands, the euro is still weighed heavy by that energy crisis. The sterling, let's have a quick look at sterling, doing slightly better, now above a key area of interest of 1.18172, as you can see here, trading just above that, so finding a potential support around there. Gold is also favoring slightly better at the moment as well, currently trading at $1,748. It came down to that key level. Sorry, really thirsty. It's a bit dry. Came down to that key level of 1,727, where it bounced from. Currently trading now at 1,748. The S&P 500, again, like I said, the bear rally does appear to be over. Currently trading at 4,123 points. I really think the next key level for the S&P 500 is 4,099 points. So that's an area of interest to watch here, just here, there, as you can see on my chart. So yeah, pretty much the same as Monday and as yesterday. We're still seeing a lot of dollar strength, a lot of risk off appetite, and a build up to the big event happening on Friday, which is obviously going to be Jay Powell's speech. But other events, like I say, US durable goods today, US GDP tomorrow. Don't forget that. We've got US GDP tomorrow. And I will be doing a watch along for that event. Okay, watch along at 12:20 p.m. UTC. So please come and join me for that. On other news, something else which is happening today, which is pretty big news, actually. And that's a brand new tixee Live series. Very, 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 very first episode. And this series is called #Ask James. And it's going to be very different from this program. Very different. Because though it's still going to be market orientated, it's going to be more educational based. And this relies on a topic of your choice. You guys send me the suggestions of a topic you want to learn about, and I will do a video specialized on that. And today is the very first episode. And today we've got a suggestion from a viewer called SMF790. Their suggestion for the topic today is to be on explaining market jargon, because I do use market jargon a lot. So I'm going to be doing a whole video dedicated to explain market jargon. This is happening today at 12:30 p.m. UTC. So please come and join me for that. It's the very first episode. I hope you love it. And again, I'd say I need more ideas. I need more topic suggestions from you good people. The market as it currently stands, the FTSE is currently negative 0.91%. DAX currently down negative 0.51%. And Eurostock 50 is currently negative 0.01%. So yeah, there we have it. Don't forget today, very first episode of #Ask James. Please come and join me for that. I hope you'll find it really interesting and useful. And like I said, I want more topics. Please share with me your ideas, whatever you want me to discuss. The next video I'll do on that, just so you know, a viewer called Jay Davis, he sent in a topic suggestion on candlesticks. So we'll be doing a video dedicated to candlesticks as well. So please bear that in mind. What's the question here? Well, hello there, nice to see you. What is the likely scenario for EU countries if the euro continues to fall under parity to the end of the year, with the countries like Italy, Spain, and Portugal enter recession? In general, they're all going to fall into recession. I think the general consensus, it's not just because the euro is under parity, they're going to fall into recession. That's going to make things a lot more difficult to buy, because obviously the weaker your currency, more expensive it is to buy goods from abroad. But no, the reason why the euro is under parity is because the market sees the EU falling into recession. They have high inflation. Energy crisis is going to cause a massive problem for them. So they're going to slip into recession because of that. So yeah, I think everybody is pretty much expecting them to fall into recession certainly by the end of this year. So it's not to do with the fact that the euro is under parity. Euro is at parity because of recession fears. But a really good question all the same. Don't forget, other people can ask me questions, or you can simply say hello if you like, anytime you wish. Or, share me your ideas. Tell me what you think is happening in the market. Your opinions. Thank you. You're more than welcome. You're more than welcome. Now, thank you for asking the question. It's nice to have interaction. So I really appreciate it. Thank you. Like I say, you can ask me anything, because this is a live broadcast, obviously, and live does mean live. Or share your ideas for topics for the new series, #AskJames, which I'm really excited about. I hope you're going to like it. I hope you can find it useful. Okay, not a problem. If there is no further questions, don't forget, if you think of a question later, you can put it in the comment section below, either on Facebook or YouTube. I will see it and I will answer it next time I go live on air, which of course will be #AskJames, and of course again later this afternoon at 2 p.m. UTC to do the US Open and see how the US is going to do. So yeah, please join me for that. Anyway, if there is no questions, don't worry. Till next time, don't forget, if you're watching me on Facebook and you've enjoyed this little video, give us a follow if you like. If you're watching me on YouTube and you like this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful, and you put up with me, my over-the-top enthusiasm for the markets, then give me one of these. It's nice to know that you like what I do. I can see I've got a couple of likes already, and I really do appreciate that. And the same as I appreciate every single one of you coming along to watch me. I really do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.